Alright guys, good afternoon. It's 4 o'clock. Let's start the class. Well, in the last class, I started to introduce what is job order costing. And I said, starting from that class, we would focus on the cost controls in the manufacturing companies. I introduced two primary costing methods. The first one is job order costing. Well, job order costing is the costing system that accumulates costs for each unique batch or job. And I said this costing method is primarily used for the companies that provide specialized or unique products to their customers. In this chapter, we will discuss what the job order costing is. And in addition, I introduced another costing method that is process costing. Well, and I said in the next chapter, in the next class, we will start discussing what process costing is. Okay, in the last class, I introduced how the materials and how the labor costs are assigned to specific jobs. And I used job 27 in STL company, the Smart Touch Learning company, to show how job order costing is used. Well, first of all, and again, I would like to focus that again. The overall cost of the products in a manufacturing company primarily consists of three parts. First, materials, direct materials, plus direct labors. In addition to these two, we have manufacturing overheads. So, in job order costing, we need to first assign the direct materials to specific jobs. When we purchase the materials, regarding to accounting process, when we purchase the materials, we debit raw material inventories and credit accounts payable for on-account purchase. And regarding to the indirect materials used, we need to debit manufacturing overheads and credit raw materials inventories. And of course, for direct materials, we need to debit WIP inventories and credit raw materials inventories. And similarly, that's also true to the labor costs. Well, when the labor cost occurs in a specific job order, we debit the direct labors to WIP inventories, that is work in process inventory, and we debit indirect labors to manufacturing overheads and credit the wages payables. Well, this is how do we deal with the direct and indirect material, as well as labors. In addition to materials and labors, we have manufacturing overheads incurred in a manufacturing companies. For the examples are like the depreciations, the utilities paid, the plant insurance, or plant property tax. Well, for manufacturing overheads, we need the temporary account, that is, the manufacturing overhead debited. Why do I say that it is a temporary account? Because we need to adjust the balance of this account to zero at the end of manufacturing period. Well, I will introduce how to do this adjustment right in this class. Okay, this is what we did for the incurred manufacturing overheads, such as depreciations, utilities, etc., etc. But we need to, based on the estimate, we have to assign the incurred manufacturing overhead to specific jobs. How do we do that? That is the heart of job order costing. In the last class, I introduced what we do before the periods and during the periods. Before the periods, we need to calculate the predetermined overhead allocation rate. And based on that rate, we need to allocate the overhead. Regarding to this allocation, the most commonly used overhead base are like direct labor hours, direct labor costs, or machine hours. For labor-intensive production environments, we use labor hours or labor costs as location base. But for machine-intensive production environments, we would like to use machine hours as a location base. And based on this predetermined allocation rates, we can allocate part of the allocation base to specific jobs. Well, this is what was introduced in the last class. And today we'll see what happens when products are completed and sold. Once you know how to accumulate, assign, and allocate the cost of direct materials, direct labors, and overhead to specific jobs, the process must be completed by accounting for the completion of jobs, accounting for the sales of jobs, and adjusting manufacturing overhead. Normally, journal entries would be made as each individual job is completed. But here we are showing is as one summary journal entry. Transaction 9. Let's assume the 644,600 cost of goods manufactured is the cost of all jobs that this company completed during 2020. So this is pretty much straightforward. And I can remember that in the last class, I introduced the flow of the cost. So this is one of the steps in that flow. This is how we transfer the working process inventory to finished goods inventories. We just need to debit finished goods inventory and credit WIP inventory for same account, same amounts of money in both accounts. And next, the next step is to sell them. What happens when cost of goods manufactured are sold? Well, this is the last step in the process of cost of the in the flow of the cost diagram. And let's assume that during 2020, Smartest Learning sells jobs with a sales price of $1,200,000 at a cost of $584,600. And I believe that in financial accounting class, you have learned a matching principle. Matching principle in accounting is that when you have the sales, you need to record the matching cost. So that is why we have two general entries here. The first one is regarding to the sales, and the second one is regarding to the recording of the cost of goods sold. Okay, let's see. For the first transaction, for the 10th, the transaction 10, the sales. I think that's pretty much easy as you have learned in the financial accounting class. For the sales, we need to debit accounts receivable and credit sales revenue for same amounts of money. And for the recording of cost of goods sold, we need to debit cost of goods sold and credit finished goods inventory for same amounts of money. So this is the flow of our cost flow. As we can see, regarding the transaction 9, that is jobs completed. We need to transfer the costs from WIP inventory to finished goods inventories. Or in other words, we can also say finished goods inventories are cost of goods manufactured. Okay, these parts of manufactured goods are stored in your stocks, but we cannot assure that all of the goods manufactured are sold out. So in this case, the balance of COGM is, the transferred in goods of goods, cost of goods manufactured is 644,600. But we sell only part of that. The sold part values 584,600. So this part, the cost of goods sold, is transferred to COGS account from finished goods inventory account to COGS account, cost of goods sold. Well, the last step of recording costs in a job order costing system is to adjust the manufacturing overhead account for the amount of over-allocated or under-allocated overhead. After allocating manufacturing overheads for job for 2020, $15,400 debit balance remain in the manufacturing overhead account. So this means that this company actually spends the overhead cost of $83,000, which were greater than the overheads allocated to the jobs in WIP inventory. Well, if you can remember, we allocate the overhead to WIP inventory for $67,600. But as I said, the actual overhead cost is $83,000. That is different. So in this case, when the actual overhead cost is greater than the estimated overhead cost, we say that the company's overhead cost is under-allocated. Under-allocated overhead occurs when the actual manufacturing overhead cost is greater than allocated manufacturing overhead cost, because the company allocated less cost to jobs than actual cost incurred. And on the other hand, we could have over-allocated overhead. So that means when the actual manufacturing overhead costs are less than allocated manufacturing overhead. So you may ask, why the actual manufacturing overhead can be more or less than the allocated manufacturing overhead? Because we used the estimated amount to allocate the overhead costs, if you can remember. When it's before the period, we used we calculate the predetermined allocation rate. The predetermined allocation rate is based on the estimate. So it's just an estimate. That's why we have the difference in the actual manufacturing overhead and the allocated, which is estimated manufacturing overhead cost. So when this difference is found at the end of the manufacturing period, let's see, what can we do? For example, in Smart Touch Learning Company, during the year, the manufacturing overhead account is debited for actual overhead costs incurred and credited for overhead costs allocated to the jobs. And as you see, in this T account, debit amount is located on the left side and the credit amount is allocated on the right side. Obviously, the right side, the number on the right side is greater than, the number on the left side is greater than the number on the right side. So, in this case, it results in balance on the left side. So, in this case, the balance on the debit side, we need to credit this account to make this account to 0. And if you can recall that I just said that manufacturing overhead is a temporary account used to accumulate indirect production costs during the counting period. So at the end of the counting year, this account must have a 0 balance. Therefore, an adjustment is required if the overhead is underallocated or overallocated at the end of the period. So in this case, for example, it is underallocated. Or in other words, the balance of manufacturing overhead accounts is on debit side. So let's see, what do we do to make this account with a balance of 0? So since its balance is on the debit side, we need to credit of the same amount of money of this in this account to make the balance 0. So this is what do we do. As I said, we need to credit this. We need to credit this account and debit cost of goods sold account. Well, this is how we make the adjustment. So the manufacturer overhead account balance is now 0, and cost of goods sold account reflects actual cost of producing the product. As you can see, before the adjustment, as I said, we had unadjusted balance in manufacturing overhead account of $15,400. With the adjustment, that is transaction 12, we credit same amount, $15,400, in order to make the ending balance to be $0. And regarding to this adjusted amount, where does it go? It goes to COGS account, cost of goods sold. As costs flow the job order costing system, we go through a 4-step process of accumulating, assigning, allocating, and adjusting. So this slide lists all the journal entries illustrated in this chapter. So this is transaction 1, 2, 3. And this slide is transaction 4, 5, 6, 7. And this slide, to be continued, shows the rest of the 5 transactions. So let's have a quick recap. So the first transaction 1, is about the purchase of materials on account. We need to debit raw materials inventory and credit accounts payable. And transaction 2 is the use of raw materials. We assign the indirect materials used to manufacture overhead costs, manufacturing overhead account, and direct materials used is assigned to WIP inventories, work in process inventories. Transaction 3 is the incurred labors. The direct labors is assigned to WIP inventories. Similarly, indirect labors is accumulated in manufacturing overhead accounts. Transactions 4, 5, 6, 7 is regarding to accumulated manufacturing overheads for another type. Transaction 4 is about depreciation. Transaction 5 is about the cash paid utilities to be paid in cash. Well, and transaction 6 is about insurance. Transaction 7 is about plant property tax, incurred but not paid. And all of these indirect manufacturing overheads are accumulated to debit of manufacturing overhead account. Well, let's continue. Transaction 8 Well, transaction 8 is about to allocate overheads to WIP inventory. Transaction 9 is about job completed. Transaction 10 is to match the cost of goods sold. Transaction 10 and 11 is about the sales of the goods to the customers, where transaction 11 is about to match the cost of goods sold. And the last one is the adjustment. Okay, this slide shows that manufacturer overhead account has a zero balance after adjusting entries. The materials from the raw material inventory account were allocated to WIP inventories of $355,000 and to manufacturing overheads of $17,000, as shown in transaction 2. The goods transferred from WIP inventories to finished goods inventories represent the goods completed during the manufacturing period. The goods sold were then removed from finished goods inventories and appear as a debit to cost of goods sold. So this is the summary of the entire manufacturing and selling process. So this slide shows the schedule of goods manufactured for Smart Touch Learning Company for 2020. The COGM total of 644,800 is the same value shown as a debit in the finished goods inventories. And this slide shows the income statement for the same periods. But please pay attention to the income statements that underallocated overhead is added in the cost of goods sold calculation. I mean, this part. Don't forget this part. Do not forget to add this adjustment for underallocated overhead. If overhead had been overallocated, these adjustments would have been subtracted. Okay, lastly, let's see how job order costing is used in a service company. Well, as we have seen that service companies have no inventories. These companies incur only non-inventorable costs, but their managers still need to know the cost of different jobs in order to set prices for their services. And here we will use a fictitious law firm to illustrate how service companies assign and allocate the cost to specific jobs. Well, a law firm of Walsh Associates considers each client as a separate job. This company's most significant cost is direct labors. So, how do service firms trace direct labors to individual jobs? Let's assume that the employees of this company fill out a weekly electronic labor time record and software totals the amount of time spent on each job. For example, an attorney, Lois Fox, this person's electronic time record shows that she devoted 14 hours to client 367 and 24 hours to other clients during the week of June 10th. So this person's salary and benefits total 100,000 per year, assuming a 14-hour worksheet and 50 work weeks in each year. This employee has 2,000 available work hours per year. So this employee's hourly pay rate is as follows. We use the total amount of labor costs divided by 2,000 years, 2,000 hours per year. We can know that the hourly pay rate for this employee is 50 hours, $50 per hour. For the client 366, I said, let's assume this employee spent 14 hours for this client. So the direct labor cost to this client 367 is 14 hours times $50. That is $700. This direct labor cost would be recorded on job cost order for this client. funding partner wants to know the total cost of serving each client, not just the direct labor cost. And Wash Associates also allocates indirect costs to individual clients. The law firm develops a predetermined overhead allocation rate, following the same approach that the Smartest Learning Company used. For example, in December 2017, that is the end of the previous accounting period, that law firm estimates that the following indirect costs will be incurred in the next year: office rent, office support staff, maintaining and updating libraries for each case research, advertisements, office supplies. So these 5 parts totals the indirect cost of $300,000. So next, let's see how to allocate the total of $300,000 of indirect cost to specific jobs. Okay, step 1 is to same thing, to compute the predetermined overhead allocation rate. Direct labor hours are used as the allocation base. So the company will work an estimated 10,000 direct labor hours in the next year. As the slide shows, the predetermined overhead allocation rate is $30 per direct labor hour, which is calculated as the total estimated indirect cost divided by the allocation base, which is the direct labor hours. So that is $30 equals $30. This equals to 30. This part equals to $30. This is step 1. We calculate the predetermined overhead rate. And next is to allocate indirect costs to jobs. And as I said, the employee spent 14 hours on the client 367. So we use 14 hours times $30 per hour. That is $420 should be allocated to this specific job. Okay, this slide shows the total cost assigned to assigned and allocated to client 367. As I said, the employee spends in total of 14 hours. 14 hours times 2 parts. The first part, $50 per hour, is the direct labor, the cost of direct labor. For the indirect cost, we assign $30 per hour. Well, this $30 is calculated as in the previous slide. This is how we calculate this $30 rate and times 14 hours. So in total, we allocated $1,120 to this client. And let's assume the total hourly rate is $80. And the company desires a profit equal to 75% of the company's cost. So let's see how the price of this service is determined. First, we need to calculate the markups. For the markup, the rate is 75% of the company's cost. Well, the company's cost is $80. $80 per hour. So we know the markup is $80 times 75%, that is $60 per hour. And finally, we know the price equals to cost plus markup, that is $80 plus $60. And finally, we can get the final the final price of this service should be $140 per hour. So I think this is pretty much straightforward for the job order costing to be used in a service company. Okay, this is the end of this chapter. So I think the importance of this chapter is to have a good understanding of the predetermined allocation rate. How this rate is calculated and how to use this rate to estimate the allocation of manufacturing overhead to specific jobs. Well, this is the end of this chapter. So in the next chapter, I mean starting from next Monday, I will start discussing another costing method as I introduced in the earlier part of the class, that is process costing. Well, this is the end of this class, and thanks for your attendance. If you have any questions, You can tell me